You into oblivion? Worried about inflation? How do you prepare for so many financial uncertainties? Welcome to the show that will help you develop your game plan. The Financial Quarterback with Josh Jelinski. Josh is a noted financial advisor and president of the Jelinski Advisory Group, and he's here to answer your questions. Call into the show at 800-321-0710. 800-321-0710. Now, let's kick off your financial future. Here's Josh Jelinski.
We're back. This is Josh Jelinski, the financial quarterback, taking your questions on all matters financial. So if you have questions on stocks, bonds, annuities, mutual funds, we are here for you, taking your questions on all matters financial. Give us a call, 800-321-0710. Live, unscripted, uncensored, here for you. So give us a call right now, 800-321-0710. Here's the inflation breakdown for 2022. We'll talk about that, and we'll talk about more, but I want to hear from you. Give us a call, 800-321-0710. This is live on air. You get to ask me any and every financial question you have. So, inflation was a bit hotter than expected in September, with monthly gains fueled primarily by housing, food, and medical care. The U.S. Bureau of Labor Statistics said Thursday, inflation measures how quickly the prices consumers pay for a broad range of goods and services are rising. On paper, inflation has come down. The elephant in the room is price levels are still increasing at an extremely high rate. The big picture is that inflation is high everywhere. Many think consumers will continue to feel it. According to CNBC, the CPI jumped by 8.2% in September. Relative to a year earlier, economists had expected an 8.1% annual increase. Some even said 6 to 7, which I mean, to be honest, I kind of thought it would be there. Basically, a basket of goods that cost $100 a year ago cost $108.20 today. Positive news, September's annual increase was smaller than the 8.3% rise in August. The bad, inflation is still high across many consumer categories, said Yiming Ma of Columbia. So we're going to go to the phone lines, and we have Gail, who is confused about the Social Security hike. Go ahead, Gail. You're on with Josh Jelinski, the financial quarterback.
Hi, Josh. Thank you. I am 62 now, so I called Social Security and expected to hear what you just said, that you get the 8% increase for every year that you wait. And I was surprised when the fellow particular individual I spoke with, and that can vary, said only when you hit your full retirement age, so from age 67, 68, 69, 70, if you wait until those years, at those years would you get the 8% increase. So was he wrong? And people should just be aware to call Social Security multiple times to get the right answer.
Yeah, I think he's wrong, very clearly wrong. That's why when you look at your statement and you say if you take it at 62, it's $1,500 a month. Then if you take it at 67, it's $3,000. That's reflective of the 8% raise every year by delaying. You get what's called a delayed retirement credit. So
right. I did do the calculation month by month to see what it would be if I waited for several months throughout my 62nd year. And it did appear to increase only approximately $120 a year, approximately $10 a month. And that was on the calculator online.
Yeah.
So did I misinterpret that?
Yeah, I think you are, but we'll be happy to help you. We've been doing Social Security shows for 12 years, and we've heard so many reports. People have called into Larry Kotlikoff, who wrote the book, Get What's Yours, The Revised Secrets to Social Security, which I will give you if you call us at 888-988-JOSH. Give you or any of our listeners, maybe you have parents who are getting Social Security, friends, neighbors. If they meet with us, they'll get that book for free. I recommend everybody get a Maximize My Social Security quote before you talk to Social Security. Because I'm friends with the guy. He wrote the software. He's been interviewed by Congress. And he has challenged and shamed Social Security workers. Now, I'm not saying this is every Social Security worker. We commend you if you're a public servant. But over the years, he has seen a bevy of misinformation about when to collect Social Security. So I would call us, get the Social Security review, and then go back. Okay?
Thank you so much.
Now, there may be some circumstance where there's something called the windfall elimination provision, the government pension offset. A lot of those things could kind of degrade what you're getting in Social Security. And let's say you're young where Social Security planning isn't necessary. You need to plan so that you are not reliant on Social Security. You don't want to be one of those seniors who have to practice the phrase, welcome to Walmart. No disrespect if that's you. Hey, if you're the Walmart greeter, give the biggest smile you can and give that sticker with a smile. A lot of the Walmart workers are miserable. You can brighten someone's day. However, maybe that wasn't what your desire is. Maybe that wasn't your financial plan, right? So I want to be careful to not offend anyone, but also realize that most people's financial plan, when you sit down with a financial advisor and the advisor says, what are your goals? What are your hopes? What are your dreams? You don't say, well, I want to be the Walmart greeter. Next up, we have Jerry, who has a question that I'm asked probably more than any question now, which applies to you regardless of age. So go ahead, Jerry.
Hi, good morning. How you doing today? And thank you for taking my call. I had heard something on some type of a financial plan. We have interest on I-bonds of 6%, and you have to have a minimum of $10,000. Is that something that's favorable to go into maybe if you have an extra you have $10,000 extra to invest in something like that?
Oh, yeah. It's a great deal. 10%. I mean, $10,000 gets you about an 8% rate right now. Fantastic.
They said 6% only, so how come it's 8? How come you're saying 8?
Well, you have to go. Well, it was 9.62 to be exact. And if you go to treasurydirect.gov, we can show you how to do it. Or you call my office, 888-988-JOSH. We do not work for the Treasury or Social Security, although we're talking about tips. If you go to treasurydirect.gov,
right,
you have to purchase them by Halloween to get 9.62.
Oh,
if you
really?
do not purchase them by Halloween, they go from down to 9.62 to probably 8% or whatever.
Okay, and is that something you hold on to like for 4, 5, 10 years? And
yeah, it's a longer term thing. Yeah, about 5 years. I think it's 3 years before you don't get penalized with losing interest. But it's great. It's better than giving.
What if you die in the meantime? Your kids would have to take it out right away at that point, though. Can you leave it to your kids as well as beneficiaries?
Well, they could. We could go over that when you call us. The beneficiaries.
Okay.
Yeah, I mean, you could leave a bond to your kid for sure. Yeah.
Oh, okay. I was just interested about what, I had heard that once, maybe about a month ago, and I was just curious. So now it up to 9%. All right. Thank you very much, Joe.
My name is Joe Jelinski.
Joe.
No, it's Josh. It's Josh.
Oh, I'm sorry. I forgot I was thinking of Joe.
It's
Josh. Thank you, Josh.
Yeah, Joe Bartlett Joe Bartlett or who? Joe Mama. No. Okay, wonderful to talk to you, Jerry. Yeah, just head over to treasurydirect.gov. We have a lot of seniors listening. If you need help getting the I-bond, we'll help you. We'll tell you how to get it. We don't charge for that. Give us a call, 888-988-JOSH. Folks, we're taking your calls all hour at 800-321-0710. If you have a question on stocks, bonds, annuities, financial questions, we are here for you now. If you have any question at all, stocks are struggling. So the best thing you can do is get a 27-point ultimate financial game plan. That'll be a free gift to you if you schedule and keep your no obligation review at 888-988-JOSH. I will go to the board after the break on YouTube where we will visualize everything for you from a standpoint of protection, savings, and growth. So I'm going to reveal what I would do with my money now, regardless of whether we have a depression, a recession, or a rebound if the Republicans take over Congress. Now, what could be a black swan? Let's say we have a blue wave. That could be one. Now, food prices have taken a starring role in the inflation number. Food prices have been among the largest contributing categories to inflation in recent months. The food at home index, or grocery prices, jumped 13% in September versus the same time a year ago. That's a slight decline from 13.5% in August, which was the largest 12-month increase in 40 years since March of 1979. I think this is largely due to COVID, the soy boys buying up all of the farmland. So I really believe that's a national crisis. The fact that all these wealthy people have been buying up farmland to pretend they're Kevin Costner in the Yellowstone drama. You ever watch that Yellowstone, Jim?
No.
So I think all these people want to pretend they're the guy on Yellowstone. And you know what they're doing? They're not cattle ranchers. We need cattle ranchers to raise good old American beef. Has high amounts of creatine, L-carnitine, iron, things you need in moderation, right? You don't have it every day, but having red meat once a week isn't going to kill you. So the point is, that's in part due to the soy boys not using their farmland for cattle. That's problem number one. Problem number two, COVID. Problem number three, and COVID's effect on supply chains. Problem number three, who the heck eats soy anyway? I need it for my Beyond Meat burger. Tastes gross. Stop it. Actually, the Beyond Meat burger is probably better than the other one, but it's still because it's pea protein and not soy. But I think it's gross too. Just have a burger. It's not going to kill you if you have it once in a while. So here's the thing. I think that's contributing, but also we had somebody on the show who said Russia, Ukraine is the breadbasket region of Europe, has effects on everything from pricing as it relates to soap, vegetable oils, all these various things used for food, causing food prices to go up. So what say you? Why do you think we have rampant inflation on the price of food? I'm giving you three reasons right now. COVID, soy boys, and the third is the Russia-Ukraine war is still not resolved. So if I was president, immediately I would issue an executive order causing people to actually use the farmland they're buying, or they could lease it to farm people, to ranch hands, or whatever they got to lease it to. They can have fun in the cabin. They can ride some horses on their land, but what the heck? We have some fertile ground, but we're not using it for harvesting. So that's one problem. But food prices, margarine is up 32.2%. That's directly related to Russia, Ukraine, because that's where they got a lot of the vegetable oil. Even though I don't eat margarine, I guess a lot of people. Does anybody still eat margarine? No? But apparently people eat it. I can't believe it's not butter. Those earth balance spreads are big. 32% increase on margarine and butter. I like butter. I think I'm going to buy a cow so I could milk my own cow. It's going to be cheaper than this. Eggs, 30.5%. Chickens and flour, 24.2%. Gasoline prices were the primary irritant for many American households earlier this year, when national averages briefly topped $5 a gallon. But now food has taken a starring role, according to Bankrate's Mark Hamrick. Folks, didn't I warn you about the soy boys? We did a whole show. When was that show?
No, I don't know.
Weeks ago, months ago. And I said, these people are bad for the world. Now they're bad for the economy. So anyway, now I'm not a carnivore. I believe in vegetables, but I don't see the point of these billionaires buying thousands of acres of land. 270,000 acres of land owned by Gates. I think 400,000 plus acres owned by, what's his face? Bezos. He can afford a $100 steak. You can't. You see the pictures of Bezos. He's on the yacht with his, much younger looking girlfriend, wife, whatever she is. It's like, give me a break. That guy, now he looks like some villain from a James Bond movie. He's all in shape on his yacht. He's like a Bond villain. He's on his yacht. But like 20 years ago, looked like a geek. So good for him. I'm sure he's not eating soy. Okay, so when we return, we'll be back with your questions on the economy. And then Greg wants to tell us that it worked for him to take Social Security. He is taking exception to my tip. When we return, this is Josh Jelinski. He's a bone to pick with me. Josh Jelinski, the financial quarterback. Don't touch that dial.
Tune in to the financial quarterback Josh Jelinski this weekend and learn how to protect your financial future in a down economy. Josh and his team at the Jelinski Advisory Group can help you lower your taxes and lower your risk in these uncertain times with a 27-point checklist designed to improve your financial health. Whether you're worried about runaway prices, fear of an upcoming recession, or a stock market meltdown, tune in to the financial quarterback and count on Josh Jelinski to call the play. For a free copy of Josh's book, The Retirement Reality Check, call 888-988-5674. That's 888-988-5674. Or visit Jelinski.org. That's JALINSKI.org. Maybe it seems like prices can't get much higher, or that the stock market is headed for bear territory, or maybe you're worried about another great recession. Josh Jelinski, the financial quarterback, can help you protect your family's financial future in times like these. Tune in this weekend to the financial quarterback to hear how Josh and his team can help you decrease your tax liability and lower your risk. Call 888-988-5674 to take advantage of Josh's 27-point plan to achieve financial health. And when you call, you'll receive a free copy of Josh's book, Retirement Reality Check. Tune in every weekend to the financial quarterback and call 888-988-5674 to receive your free copy of Retirement Reality Check.
Okay. Now, in an area that may be a contraindicator that we may be headed for more positive times, some listener just sent me an email calling it the worst market in a century. Russell Napier and his 20-year forecast. He says we're basically screwed. I don't know. I find that a lot of these negative things could happen. Could be very wrong, though. Now, what is interesting is according to Ben Johnson, CFA, from Bank of America Global Research, the year-to-date annualized return for the 60-40 portfolio is the worst in 100 years. Wow. So let's say you listened to Kiplinger, whatever, read Money Magazine, and you were going to retire. You didn't listen to me. You didn't read my book, Retirement Reality Check. And you did what's called the 60-40 portfolio. Somebody said, hey, you can go to some index fund company that shall be remain nameless, and you can get 60% of the S&P and 40% in a bond fund comprised of high-quality investment-grade bonds. Sounds like a respectable number, right? Wrong. That portfolio from Bank of America Global Investment Strategy is losing 30%. I mean, this is ridiculous. Now, this is why common sense is no longer common. Now, we saw this years ago and said, you know what, you should take your 30 or 40%. And I still believe this. If you want to be an advocate of the 60-40 portfolio, have 60% in risk assets like stocks, exchange traded funds, index funds, Bitcoin, whatever your favorite risk assets are. But if you want 40% not tethered to the market, if you don't want to be like our favorite Bitcoin Tina, who sold all of his, or most of his Bitcoin in the last crash, you don't want to be like an emotional investor. You don't want to be an emotional investor. So what do? Well, back in the day, people would suggest that you do a 60-40 portfolio. I was suggesting it should be a different 60-40 portfolio, and I would call it the 50-40-10 portfolio. Have 10% of your money in cash, in fiat, for your basic expenses. Have 50% in your favorite risk assets, stocks, index funds, ETFs, Bitcoin, and that other 40, now if you're younger, maybe you only have 20% in risk off assets because you have a longer time horizon. Maybe you only have 10. You should have some money in non-risk assets to weather storms and to buy more if we experience further declines in the market. Very possible. Scott Minerd, though, this week said he doesn't believe that. He believes by the World Series ending, we will have some liquidity event. This guy knows a lot. He's in with the central bankers, so maybe he knows something we don't. He's a brilliant guy. So when he says that, be careful. But that 30-40% that was in bonds, consider it in fixed assets. Right now, you can buy treasuries at 4%. You can buy I-bonds at 9.62%. You could have life insurance where the dividends are around 5% and the fixed accounts are 4%. You could have any number of fixed interest rate investing products. We are in a golden age of fixed interest products. So yes, the 60-40 portfolio is dead. Yes, bond ETFs and bond funds are passé. But the good thing is there's always a bull market somewhere. This time it's a bull market in fixed assets, fixed annuities, fixed index annuities, life insurance. I mean, think about this. You could buy a fixed product at 5% for 4.95, zero fees, zero commissions going to the broker, and you got $1 million. It's $49,500 in interest. You're just sitting back collecting checks, and you could risk the 49. So there's a strategy I say don't cook your goose's eggs. Don't cook your goose. I'll talk about that strategy next. But first, we have Greg. Go ahead.
Yes. Hey, Josh. I want to say that you might get more money waiting to collect Social Security later, but, you have to factor in, the inflation, because let's say inflation is even, 5% a year, or let's say it might be higher. That money's going to be worth less. And I figured it just makes sense to have the egg today rather than the chicken tomorrow, because, you don't know. First of all, nobody knows how long, they're going to live. And secondly, you may not get 9% raises on Social Security every year, or 8%. So, as I said, I'd rather use that money today and rather than wait. So.
Well, I certainly respect that view. It's just not the academically or the economically correct view. Here's where I wouldn't delay Social Security. If your spouse earns more than you, I would not delay. I'd let your spouse delay and you take it earlier. If you've had a heart attack, stroke, or cancer before the age of 60, I'm being overly general here, but generally speaking, If you've had health issues, you might want to take it earlier and invest the difference. Third, but if you are still working and you are going to need money, and you could be, let's say you're working in your 60s, but you've had a health event and you've made more than your other spouse, I would delay it till 70 because that money goes to your spouse if you're going to die. So that's like life insurance. So,
I'm single. So as I said, I did that.
Yeah, if you're single and ready to mingle, ladies, call us 800-321-0710. Greg is single and ready to mingle. But yeah, you're not planning for two, you're planning for one. So it does make a little bit more sense. But that's only if you're investing the difference. If you're consuming it, well, then you're not getting that inflation bump of $1 today versus $2 tomorrow. But I understand your point. I respect it. I'm not disrespecting your opinion.
Sure. Everybody's situation is different, but the thing is, having that extra money come in every month is helping me, So I can't really say, my job situation was, not the worst, but not the best either. There's a lot of factors. I didn't do it, lightly. I kind of did my own analysis, and I said, I think this is the way to go.
Like I said, I told my father to take it early because he had health issues.
Yeah.
And my mother. Mm-hmm. And I didn't think they were going to live past a certain age, and they didn't. But, if you have longevity in your family, you should delay it. But, I certainly respect your comments, and hey, not everybody agrees, right?
That's right. Thank you.
Thank you so much. Now, this from Scott Minard. The last time the bond market reached these stress levels of illiquidity and volatility, the Fed cuts rates. Now, like I said, though, golden age for investing. If you are a fixed income investor, people are so scared right now. So what say you? Give us a call, 800-321-0710. 800-321-0710. We'll take another break, and when we return, we'll be back with what do you do with your money in these uncertain times where nobody exactly knows where things are headed. This is Josh Jelinski, the financial quarterback. Don't touch that dial.
Tune in to the financial quarterback Josh Jelinski this weekend and learn how to protect your financial future in a down economy. Josh and his team at the Jelinski Advisory Group can help you lower your taxes and lower your risk in these uncertain times with a 27-point checklist designed to improve your financial health. Whether you're worried about runaway prices, fear of an upcoming recession, or a stock market meltdown, tune in to the financial quarterback and count on Josh Jelinski to call the play. For a free copy of Josh's book, The Retirement Reality Check, call 888-988-5674. That's 888-988-5674. Or visit Jelinski.org. That's JALINSKI.org.
We're back. This is Josh Jelinski, the financial quarterback. I'm going to throw this question open because it's about managing your money. If you were the Yankees, and if Aaron Judge was 0-8 in the playoffs, would you give him $50 million a year, assuming you had an unlimited budget? That's my question of the day. 800-321-0710. Answer it. What would you give Aaron Judge to stay if you were a Yankees? The Yankees fans booed him after arguably one of the greatest seasons a hitter could hit. But in New York, it only matters if you win. That's why the Yankees fans always loved Derek Jeter and Bernie Williams, because they won. So folks, if you have a question, call me 800-321-0710. We are going to my model for financial success, and I want to show you some things right now. So this is our 27-point. It's on the YouTube Live. If you want to see my modeling, You can go to YouTube, just type in Josh Jelinski, the financial quarterback. I will do a little TA, technical analysis as well. Folks, I'm worried in the stock market. I do believe we may have hit the seasonal low. The buy Rosh Hashanah, now the sell Rosh Hashanah, buy Yom Kippur low, typically around October 6th. We hit that low almost yesterday. We closed at about 35.83. What is negative is we are hitting new lows. We hit new lows in June. We hit new lows in October. And basically the last week, and I'm showing a chart from Yahoo Finance on the S&P, which I always like because then you can kind of see things simply put. And the trend lines are clearly skewing down. They've not broken the trend. We are getting below the line, so maybe we might revert to the mean, but not a really good trend. No good trend line over the last few weeks. Really since the year to date. Now, over the last month, and disregard these lines on the upper band or the lower band, we hit a low of 35.85 on the S&P September 30th, 35.77 October 12th. We then almost hit that yesterday. So we either at a short-term low, or we are gearing for a very hellish next few weeks. Nobody really knows. We could make portentions. I think from now to December will be rough, but I could also see a white swan event like Russia-Ukraine resolution, Republicans winning the Senate and the House, causing gridlock, which the market tends to love. So nobody really knows what's going to happen. So what do? Do you listen to people who proclaim doom and tell you to sell all of your risk assets? No, those people are usually in the ash bin of history. They're usually laughed at because they told everybody, sell everything. I mean, he's a great commentator. What's that guy? He sounded like Tina. Well, what's his name? I don't know. Jim Rickards. Jim Rickards was prophesying doom for like the last 8 to 10 years. Now he's finally right. He's definitely correct. But, he's been wrong for a decade. So you missed out on one of the greatest bull markets in history. We're going to go to the screen, but our tech guy is playing games, so hopefully he can resolve that. I want to show my screen. Tom, I don't know why he's messing around with the screen. So, folks, give us a call, 800-321-0710. If you have a question. Okay, now we're going on the screen. So people tell me, Josh, I don't know what's going to happen with the market. So what do? Well, you need to look at 5. This could be you're worth $500 million. I help clients of all shapes, sizes, 50 million, 5 million, 5,000, 50,000. Do you have a model to verify economic decisions? Gigi's calling this right now, who's concerned her portfolio is not doing well. I'm going to get to the model, but first, Gigi, go ahead.
Well, I guess, hi, Josh. I'd like to know about that model. I am your typical retiree, was a high school teacher for many, many years, retired, took my pension early. And for all the years that I've invested in the stock market, I've seen my portfolio really deteriorate. And I guess I have an inability to trust at this point. I had a mother-in-law, and all she ever did was tell me is when you buy a stock, She lived through the Depression, and she would say to me, hold on to it, always buy blue chips. And I did that. I kind of did, what she said. And over the years, many years ago, I set up an investment club. We didn't do so well. But my question is now, it's a trust issue on my part. And I've been with this brokerage firm for a very, very long time. I never hear from them. And I guess I feel as though kind of like paralyzed. And I don't do anything about it. And my family differs with me a lot. And I think feeling this emotional paralyzation about the market, I guess I feel as though I'm really losing out. And I guess it's because of for the first time, have grandchildren. I had a lot of loss in my family, lost my brother to ALS, both my parents. And I guess there's a degree of fear, but yet I don't know what to do. I guess I feel as though I need help. And yet my level of trust, I can't surrender. And I guess there's a lot of emotion when it comes to investment. And I spoke to a gentleman that was on the phone just a second ago, and he said, we don't talk about various stocks. So my question is, I look at a stock, say a blue chip that's over the years has done very well, and then, of course, it tanked. And I never want to let go and just say, because I always feel like it's going to come back, it's going to come back. Well, I've done that 20 years. And what I've seen when you look at the how do you say that, the model that you're suggesting, you go into Yahoo and you look at the actual grid, my portfolio's never gone up. It'll go, you know what I'm saying? And I'm saying to myself, who can I trust? And yes, I guess I had a situation with the company in 2008 when the market, went through a crisis. And I remember one stock I had that was worth, not a significant amount of money. Then the company was saved by AIG. It was saved by the government, where I saw my niece who worked for Lehman Brothers lose her job, lose a lot. And yet the money that AIG was worth, it was lost. And now I still get a statement from them saying I have $5 when I had $10,000. So it's kind of like for a layman like myself, that's what affects your ability to trust. Because, I then went to the person who had my account, and yet he just said, everybody had that happen to them. Well, maybe I don't understand everything, but I'm just feeling as though I would really like to see, when you're 70 years old and you saved your whole life, and seeing, you just say to yourself, like you were talking about earlier, do you want to see, how shall I say, be the person at Walmart because my pension is very low.
You want to be the Walmart greeter. Well, I want to be careful. There are three things that you need to do to avoid being the Walmart greeter. I want to get to portfolio construction. This is a really great segment because you brought up 100 things. So I'm going to focus on three and then maybe I'll clarify. Number one is let's talk about a model. Going to Yahoo Finance is not a model. That's first. I want everybody to write this down. Do I have a model to verify economic decisions? And that doesn't mean a Fidelity.com calculator. It means that you have a model that organizes your life on 5 components. Protection. My heart goes out to you. You in a lot of ways, you remind me of me 20 years ago. My family did not do well financially. They put their money in index funds, which somebody said to do. And then my dad got disabled and they lost everything. They sold their house at the wrong time. They got disabled. They didn't have disability insurance. They didn't have a model. It just sounds like you of a stockbroker. Maybe they're well-meaning, but stocks are like 1/27th of what we do in our model. So you may say, well, over the last 10, 20 years, I've not had the success in the markets that others have had. Well, have you been in funds or have you mostly been in individual stocks? That would be my first question. Do you know? Mm-hmm. Or were you a stock picker? Because stock picking has been shown by a lot of people to be futile in beating the indexes. Now, I believe in individual stocks, but we compare our individual stock strategies to the indexes. But you could have bought a S&P 500 index fund 20 years ago. What did you start with 20 years ago? Let's do the math. We'll go to the model.
Okay.
What did you...
Well, in an IRA account, I went with individual stocks.
Okay.
We're talking about before the funds even came into existence, you know.
But how much were those... how much did you put in? 100 grand? I don't know. Just
yeah.
Give me a number.
Something like
that. If you put 100 grand in 20 years ago, even with the volatility that we experienced in 08, even with 2000, I'll show this with historical rates beginning from the year 2000, which was a scary time, much like today in the markets. If you had 100 grand in, that 100 grand would have grown to $493,000.
Yeah, well, I'm nowhere near that.
If you had $1 million, it would be 4.93 million. So you just extrapolate your numbers. Mm. That's just buying one S&P fund, doing nothing to it. Now, I'm not telling you to do that. Let's say you add in management fees because you had somebody help you. That 100 grand would have grown.
I didn't have that.
That 100 grand would have grown to 395,000.
Right.
If you diversified and said, well, I want to go 60-40, even though the 60-40 portfolio has had bad results this year, you would have had 303,000. So my hunch is that you buy stocks, you dabble, you hold on for a long time. Maybe they're the wrong stocks. You got to evaluate that. Maybe you're not properly diversified. Maybe you're a stock picker. And the biggest problem that I see is you don't have a model to verify economic decisions. So I'm going to show the model right now. Mm-hmm. So the way the model works, and this is... if you look at the model, there are 27 components. Car insurance, property insurance, liability. So there are 5 components of wealth building: cash flow, debt, protection, savings, and growth. You're just focused on the growth. You follow? So you don't have savings. You don't have safe money. So the way I structured my portfolio, I did not trust the stock market when I got into this business because my parents lost a lot of money. So you know what I did as I was starting making money? I allocated money towards protection, which is P. It's the purple box in the YouTube. Meaning my dad got disabled early, much to like the struggles you've had. And ALS is much worse than what they went through. But the point is, I loaded myself up with disability insurance from my early 20s. Why? I did not want disability to derail my plan. Same with life insurance. They died early. I did not want death to derail my plans. I gave a little talk to a bunch of Bitcoiners at TabConf, and the whole talk was, whether you're into stocks or Bitcoin, the goal is to hodl, right? You want to be a long-term investor and never sell. Now, it doesn't mean never sell stocks, right? Because Sears of 50 years ago is not the same Sears today. I wouldn't touch Sears or JCPenney or Kmart, you know, and Walmart and Amazon of today will not be Walmart and Amazon 30 years from now. So you do have to reevaluate your stocks on a periodic basis. But if you want to be a long-term investor, you have to arrange your affairs in such a way where you do not disregard protection. So we have people with lots of money who listen, whether they have lots in stocks or their business or Bitcoin, they don't have trusts. So who's going to make the decisions? Just heard of a story of a wealthy entrepreneur in his 20s recently through a blood clot and is not the same. His girlfriend is now deciding his affairs, his live-in girlfriend, not his family members. We don't really know what he wanted to do because the blood clot affected his brain. So do you have disability insurance where if you lost your job, you're going to get paid? Do you have life insurance equal to 1 times your assets so that you could spend your money on you? Do you have a trust so that your affairs? Do you have car insurance, home insurance, business insurance? And not just those insurances. Do you have them where you are protected? Because a lot of people have them and they go cheap. All of this is needed. This is your moat around your financial castle. And then a will documents. That's your protection grid. So there's 5 components. Meaning if your protection component was fine, you wouldn't worry about a disability. You wouldn't worry about it, your life ending. So then your only worry is the market. And that's why we have the next grid, which is the savings grid, which I'll get to you after the next break. This is Josh Jelinski, the financial quarterback. And if you want this model arrayed with your real numbers on it, customized, call me at 888-988-JOSH, 888-988-5674. We'll be back after these messages.
Maybe it seems like prices can't get much higher, or that the stock market is headed for bear territory, or maybe you're worried about another great recession. Josh Jelinski, the financial quarterback, can help you protect your family's financial future in times like these. Tune in this weekend to The Financial Quarterback to hear how Josh and his team can help you decrease your tax liability and lower your risk. Call 888-988-5674 to take advantage of Josh's 27-point plan to achieve financial health. And when you call, you'll receive a free copy of Josh's book, Retirement Reality Check. Tune in every weekend to The Financial Quarterback and call 888-988-5674 to receive your free copy of Retirement Reality Check. Tune in to The Financial Quarterback Josh Jelinski this weekend and learn how to protect your financial future in a down economy. Josh and his team at the Jelinski Advisory Group can help you lower your taxes and lower your risk in these uncertain times with a 27-point checklist designed to improve your financial health. Whether you're worried about runaway prices, fear of an upcoming recession, or a stock market meltdown, tune in to The Financial Quarterback and count on Josh Jelinski to call the play. For a free copy of Josh's book, The Retirement Reality Check, call 888-988-5674. That's 888-988-5674. Or visit Jelinski.org. That's JALINSKI.org.
Okay, we're back. And Gigi is gone, but I think her question is still big. A lot of you are worried about the future and you don't know what you're going to do with your money. Get a model. So people say I have a plan. I was talking to a bunch of people at TabConf yesterday, and many of you don't even have trusts. And just if you put your money through a will, it becomes a matter of public record. Now, you might say, I have a dead man switch. I know what I'm going to do to keep my affairs private. Well, what if there's a dispute among your heirs for money? Then all of your private data is going to be a matter of a court opinion. And just call your county clerk's office or your probate officer in the county, and you'll know Social Security. You can the Social Security number of the deceased and the assets. So you got to set up your affairs in a proper way, and it's protection savings growth, which is the savings part is you can't have all your money in the stock market if you want to be a long-term buy and hold type. You have to have money in cash to weather emergencies, in income-oriented things, in Roths and IRAs to generate income, so you can hodl the blue. That's your growth assets. So next up, we're going to go to the phone lines. We have Maureen. Go ahead. And then Jack. Bonds versus bond funds. Go ahead, Maureen.
Yeah. Hi, Josh. Two things. Last night I was listening to this guy by the name of Jim Rickards, and he was talking about Biden's Section 4, which is 14067, which is going to supposedly take money, take our cash and put it into these Chinese digital currency. And then someone else was talking about the ESG, which is the environmental social governance, and make sure you're where you've got your money in your bank or your credit union is not going through the ESG system. And so I'm getting a little bit, and then my IRA has depleted, by half. So, and I've got a Roth IRA. So I'm getting a little bit anxious for the new year of what's going to happen with this so-called digital currency. I don't understand it. I don't know what we're going to do about this. So,
wow,
yeah.
You threw a lot out there. We could have a whole show. Number one tip, Jim Rickards has been touting fear. I think I mentioned him a little bit ago for years. He's an exciting author.
Yeah, he's a high road.
He's always a doomsday predictor. You need a model. Do I believe we're headed to a cashless society? Yes. Do I believe you should protect yourself? Yes. Do I believe you should be a naive? No. That being said, though, if it was up to Rickards, you'd buy a farm, get a bunch of guns and ammo and go live in the farm. If you want to do that, do that. But he wants you to subscribe to his newsletter and pay him this and just save your money. Listen to me. That's the importance of the protection, savings, and growth model. You have growth if Rickards is wrong. You have savings and protection so that if he's right, you're hedged. So that's the importance of diversification. You can have some cash. You can have some gold. You can have some, year's worth of food supply. I recommend everybody, if you're really worried about, go to Costco, buy a year's worth of food supply. Do that. I'm not, that's a couple grand, probably the best couple grand you'd ever spend. But if all of those things happen, we are in for a really rough time. And I think just like what we did with COVID, we'll go through it. Now, the ESG is big. And we are not subscribers of ESG mandates yet until we're going to be forced to by the government. And if you want a financial advisor who doesn't believe in the ESG woke crap, call us at 888-988-JOSH. We can make sure you're not investing in woke companies. Now, I will tell you, how do you stop ESG? You get your elected official to stop it. Because in Louisiana, they had a big victory where they pushed BlackRock out from managing their pension. But did I get a call to manage the Louisiana pension? No. So I bet you some other woke company did. They just masked it better. And that's the thing, though. Whose environmental, social, and governance standards? So as an investment advisor, my job is to do the best thing for my client. Not do the best thing for AOC's portfolio, which the ESG thing is having us subscribe to these woke mandates. And even Tesla was seen to not be an ESG friendly stock, even though probably done more than any company in reducing emissions. So I'm against the whole thing. So we'll see. Any other questions?
Yeah, one quick thing. A lot of publications and such are going, buy gold, buy silver. Well, the thing is the market is really going to crash. How the heck do you turn in your – if I need to make a house payment or something, how do I turn in my gold?
Yeah, but that's exactly my point. It's a model. If you want to have, 5% of your portfolio in gold and silver, fine, but you model it out. So and right, you can't melt gold, you can't eat it. Maybe there'll be some barter system in this post-apocalyptic world that Jim Rickards is talking about. But, don't let fear drive the train. Get a protection, savings, and growth model review. We're going to keep the conversation going after this break. This is Josh Jelinski, the financial quarterback. Give us a call. 888-988-JOSH for the protection, savings, and growth review. 888-988-JOSH.
The preceding program was sponsored by the Jelensky Advisory Group. Any awards, rankings, or recognition by unaffiliated third parties or publications, including 5-Star Wealth Manager, Advisory of the Year finalist by Senior Market Advisor, and Top of the $1 Million Roundtable, are in no way indicative of the advisor's future performance or any individual client's investment success. No award, ranking, or recognition should be construed as a current or past endorsement of Josh Jelensky or Wealth Quarterback LLC. Information regarding specific awards, rankings, or recognitions is available on the Wealth Quarterback website at jelensky.org. All investment strategies have the potential for profit or loss. Investment strategies such as asset allocation, diversification, or rebalancing do not assure or guarantee better performance and cannot eliminate the risk of investment losses. There are no guarantees that a portfolio employing these or any other strategy will outperform a portfolio that does not engage in such strategies. This broadcast should not be construed by any client or prospective client as a solicitation to effect or attempt to effect transactions in securities or the rendering of personalized investment advice. Due to various factors, including changing market conditions, the information discussed in this broadcast may no longer be reflective of current positions or recommendations. While information presented is believed to be factual and up to date, Josh Jelensky and Wealth Quarterback do not guarantee its accuracy, and it should not be regarded as a complete analysis of the subjects discussed. The tax and estate planning information discussed is general in nature, is provided for informational purposes only, and should not be construed as legal or tax advice. Listeners should consult an attorney or tax professional regarding their specific legal or tax situation. Investment advisory services offered through Wealth Quarterback LLC.
WOR and WAXQ HD2 New York, an iHeart radio station. Available everywhere on our free iHeart Radio app. #1 for music,